Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Ajay Sharma, and the closing trades are very lackluster. Call it tepid, call it weak, lacking cues in all sense. And at least if you look at the index level, it's been very range bound within that 20-30 point range. Having said that, at least for the week, there are some gains that we are witnessing on Nifty. It's 0.3% higher, and more importantly, it will be the fourth consecutive week of gains. And this is the first time that we have seen that in the last 3 to 4 months. I think the last time it happened was in the month of July. Since then, we haven't seen this kind of winning streak for the Nifty, so at least that's something positive. The winners for the week were clearly the mid-cap space. The mid-cap index is tracking gains of almost 0.6%. Today, it's all about insurance companies. Pick up a life insurance name or a general insurance company. They're all sitting at multi-month highs, and the biggest intraday gains that we have seen in many of these stocks, given they are hitting 15 to 20% gains today. Pharma has managed to bounce back, so Cipla, Lupin, Gland Pharma, all of these names are reacting to news flow. Real estate continues to charge ahead, and then smaller sector, Ajay, likes of diagnostics, some of the power industrials, defense, they're also seeing traction.
But if you look at, yes, you're right broadly. But market is taking a lot of effort to go after and find a stock which is trending on the one side. That is the point we are trying to make around here. So index traders, be it Bank Nifty or Nifty, are finding extremely hard to trade because it's not trending anywhere. Look at the Bank Nifty; it will also come up on the screen. Insurance for last 2 days have been buzzing, and that too, we spoke to you about it early in the morning. That apart from OMCs, the other space in the PSU basket where there was residual value, maybe no immediate trigger, and trigger came in the form of the story which my colleague Anurag Shah brought you, and you had some triggers coming in from the government policy making side, undervalued, and then you saw the space of public sector insurance, because private sector already have been rallying for almost 10 days. So that relative insurance argument triggered a big buy. But otherwise, if you see, it is a kind of a very range-bound market. But we'll take the discussion forward. It's our job to get you stocks which are looking juicy for trades, ripe for trades, even in a kind of a range-bound market. We've got Kunal also joining in. But since we are at the subject of insurers, especially public sector insurers, which are deeply undervalued, we have one insurance company voice joining us on the show. Mr. Ramaswamy Narayanan, CMD of GIC RE, is joining us. Thank you very much, Mr. Ramaswamy, for joining us. We are talking after a very long time. There is a massive re-rating of the entire insurance space. It was started by private sector insurance companies last 2-3 days. Even the public sector enterprises, the insurance companies and reinsurance as well is getting completely re-rated. The view in the market and the industry is that there could be policy making and plus some impetus coming in which could improve volumes. What are your thoughts on the way business momentum is at your end?
No, I think we are doing well. So I guess maybe the interest coming forward now is based on the fact that the insurance industry is doing well now, as well as maybe the understanding of what this industry is all about is also happening in the market. So I guess from GIC's perspective, our business has been doing well. We have managed to post very good results for 22-23, and we are continuing that forward in the current year for the last 2 quarters as well. Further, we've also got a credit rating boost from AM Best, since we are an international company doing business in over 150 countries. We need a credit rating from an international agency. In our case, it is AM Best, and they have boosted our credit rating as well. So I think all these possibly play a good part in ensuring that people have a favorable view of the market.
This point which you raised for us, that international credit agency kind of endorsement, how does that benefit your business model?
So typically what happens is when you are a reinsurer and you typically write business around the world, obviously you don't have offices in all of these countries that you're writing. So what would happen is regulators, just to ensure that there are no fly-by-night operators, they normally try and ensure that reinsurers of a particular brand or of a particular kind of rating are only allowed to do business. So getting a better rating always helps us to access better quality business abroad. So that is a definite welcome relief for us.
So was also looking at your breakup, but within motor, health, agro, which are the segments which are seeing the maximum amount of growth?
I would say health, because I think post COVID, there has been a lot of understanding amongst the investing public among the insuring public that you need to be adequately covered, because even healthy people started getting claims. So that's an area which obviously due to claims there were due to COVID there were high claims ratios. But then going forward in the last 2 years, we are seeing a tremendous growth in that sector.
Motor specifically, and this is the story my colleague was breaking, that there's 54% of vehicles on road which is uninsured. How do you think it is practical to get that large a sum under the insured basket? Do you think it's something which is a possibility even in, let's say, next 1 to 2 years?
Yes, it is. I mean, may not be the entire number. What will finally happen is the insurance industry will have to work closely with the government on this, because the government would have all these information available, and based on that we can use both the government platforms as well as the insurance company's own reach and ensure that this is done. And this is very much in the bandwidth of all people concerned, whether it is the regulators, the ministry, or the insurance companies. We are all aware of the fact that this is something which is happening, and we need to ensure that all these cars are covered, because that is actually a mandate. So I wouldn't know whether in the next 1 year we would be able to get all these cars under the ambit of insurance. But this is something which is very much on the agenda as far as insurance companies are concerned.
This is something you have been discussing with the government. Is this something which you have had meetings about, recommendations, discussions already in place?
Absolutely, absolutely. This is something which we have been discussing with the the union government as well as the state governments. The regulators are onto this, and everybody is realized that this is something that we need to do. This is an area which has been let gone, and obviously this is an area which we need to look at, both from a business perspective as well as to ensure that the mandatory insurance is there.
Point you're saying, Mr. Ramaswamy. So our colleague said that this push is coming. Will it be in the form of some policy move or from the regulator? Yes, of course, such a big half of the population of the entire vehicles cannot be brought into the system in a year's time. But will it not certainly improve the outlook on your volumes for the next 2 to 3 years? And if yes, by how much additional business are we talking about here? Any early estimates?
Well, I think then you will have to speak to insurance companies on this, because what happens is motor is something which typically gets written by insurance companies and mostly retained by them, because it's a retail product, comparatively small premiums, and all the companies have the capacities to, retain this business. What we provide cover as a reinsurance companies on a typical motor portfolio would be covering them for something which is catastrophic in nature. So earthquake happens or a flood happens, and a number of cars get affected by that. That is where a reinsurer like GIC would step in. So typically, if you want to look at volumes as to how much these insurance companies are looking at, I guess you'll need to speak to maybe a New India or an ICICI.
But let me just quickly come to the rest of your business as well. I understand that reinsurance rates are getting revised from 15th December. How much does that impact you, especially in the fire and the property segment?
You said reinsurance rates are getting revised.
Is that correct?
No, not really. So what happens is reinsurance is something which happens, mostly it's a once in a year kind of a stuff. So there are certain markets which do their reinsurance as on 1st January, and then for the entire year those rates are valid. For India, since we follow a financial year of April to March, our renewals happen in April. So typically that is the time when we would change the insurance rates, whether it is upwards or downwards, depending on performance, depending on profits, depending on how the portfolio has changed. So that is when it would happen. Yes, we are currently in the process of doing the renewals for our 1st January renewals, which is most of the international markets, since they follow a calendar year method. So that is still going on. We expect prices to improve definitely on the reinsurance front, because internationally there have been, the last few years have been very difficult There have been a lot of catastrophic events happening around the world. So prices increased last year. I am believing that prices would increase this year as well.
Sir, last word, I think your combined ratio still continues to be above 110%. When do you expect it to come down to, let's say, below 100?
Ma'am, this is something that we continue to look at and work at, relentlessly. But what you need to understand is, basically, this is not something which, would happen across the world for everybody. There are a few developed markets where you would expect combined ratios to remain below 100 because that is the way that market works. In a developing market like India, where GIC writes almost 70% of its book, the combined ratio for the entire market is close to 120. So obviously for us to come much below that to below 100 is something very difficult. We also need to understand that this is a market in which premium comes upfront. Unless you pay the premium, the insurance company does not take up the risk. So the premium comes upfront, the claims happen through the year. So a good float of money gets created, which is invested. The investment market in India is good. Even on a fixed income basis, we are able to get close to 7.5 to 8%. So obviously we need to realize that the investment returns would ideally be used to ensure that the market is viable. So trying to look at a combined of 100 in the near future is something that would be silly on our part. It is something that we are working on, but then I would say anywhere up to 105 to 108% of pure combined is still very much viable for us. What I normally tell people is, you please look at our operating results, because what operating results contain is the investment income which has come from the policyholders' funds. And these are the funds which are kept with me because I am doing reinsurance and insurance as a business. So as long as that fund and the returns from that give me enough to be sustainable, give me enough to be profitable on an operating basis, I think we are doing well.
No, fair enough. Point taken, sir. Absolutely. Thank you so much for making time and covering a whole host of issues for us. So that's the latest coming in from GIC Reinsurance, that they're looking at the combined ratio of 105 to 108. And yes, it is possible to extend that entire, the vehicles which are uninsured right now into the ambit of insured, but it'll take a bit of time. The discussions are already underway. So that's the latest coming in for GIC. But on that note, we are slipping into a very short break. Don't go anywhere.
Right, so let's take the discussion forward with two very interesting sectors to watch out for. We've seen how the festive season has actually been very buzzing. Markets have been full, malls have been full. So we just thought of getting you a industry check on what's happening in some of the biggest categories: apparel, footwear, all of that housed under DLF Retail, the biggest mall of India. We've got Pushpa Bector joining in. She's the executive director. And we also have Nilesh Gupta to give you a sense of electronics retailing, consumer durables, and you have it. Thank you, ladies and gentlemen, lady and the gentleman on the show, for chatting with us this afternoon. So you've been, how the cash counters have been ringing, Nilesh, at your end?
So yes, the Diwali was very good, reasonably good. And as far as Black Friday is concerned, this is an event which is in the making. So for the last 3 to 4 years, our industry have been trying to make Black Friday an event, and year on year we are seeing a growth happening and more discounts happening. This year what has happened is the Black Friday is very soon post Diwali. So but we have still seen footfalls increase on a normal Friday. It's much better. But the major icing on the cake is going to be on the weekend, Saturday, Sunday. And we have extended the Black Friday to Monday also. Since being Guru Nanak Jayanti, it's a bank holiday. So I think we have a 4 days Black Friday, and I think we are going to do reasonably good.
Good, and if I go by what I'm hearing in terms of people lining up to buy the discounted items, I think it's going to be something which Pushpa would like as well. Pushpa, before I start discussing with you on the numbers, tell me, what have you bought? What did you like in the entire Black Friday sale?
She's sitting right in the middle. Every day she walks to work. She's looking at the India's top brands coming out with such amazing offers. I'm sure you get carried away yourself.
Well, yes. In fact, I'm sitting at Mall of India today for Black Friday, and there's lots to purchase, on a day like this, because you're getting fresh merchandise at 50% off, and many of the in Delhi, what we see is the trend is so good that winter, is strong in Delhi. And Black Friday, in a way, onsets that whole winter offtake of products. So we have been doing Black Fridays for the past 5 years, and every year it's become bigger than before. You would have seen, be it newspaper ads or programs are going viral digitally, because we do look at Black Friday as a very big sales boost for the season. And all I can tell you is Mall of India is chock-a-block today. You will need to wait to get into stores. And so, yeah, we are in a good frame of mind. And as Nilesh rightly said, it's not just Friday. The brands extend the discount all the way to the weekend. So it's an extremely busy weekend that we see. And it's a bonanza in terms of shopping, and people love the range, and they're getting fresh merchandise and some very good value deals. So yes, it's quite robust in terms of sales expectations.
Sure, but Pushpa, is it that this year the discounting is on the higher side, they had to do a lot more marketing, or is it pretty much as usual?
Well, no, we've been doing Black Friday for the past 5 years, and every year we've seen a spike. This year, we believe that because, till now, we have seen a lot of occasion wear purchases, because a lot of weddings and wedding planning that was happening. The winter purchases should happen starting this Black Friday. And hence we see a good number of people buying the jackets that they wanted, the sweaters they wanted, or whatever winter wear that they are gearing up for. And there's also a nip in the air already in Delhi. So I'm sure people will, ramp up their wardrobe for the party season.
Correct. I can imagine how the weather in Delhi must be right now, and people shopping is a must. So my Delhi visit is overdue. I'm considering it perhaps in December or Jan. But coming back to Mumbai, Nilesh, the way, I've observed Vijay sales has actually evolved over the years. It was more about televisions, fridge and washing machines, but now electronics has become a very large part as well. So talk to us about how the bifurcation was this season and what's the trend shaping up there?
So this year the Diwali has been quite reasonably good, but if you ask me, it has been a digital Diwali more than the appliances and consumer durable Diwali. So I think I'm glad that we moved on. We added the digital products in our portfolio. As you rightly said, Vijay sales of yesteryears was only consumer durables and televisions. So this year, if I see, a lot of people have focused more on mobiles, and specifically mobiles which are costing more than 60,000-70,000 upwards. And primarily the reason has been because of great EMI offers of 0 by 24. So I think that's pushed the envelope to a lot. And seeing is when people buy a mobile, possibly they are pushing their consumer durable exchange or a new purchase a little ahead. And this is what has been predominantly seen in Diwali. But this Black Friday, if we come back to Black Friday, I think it's a great opportunity for all those people who missed buying in Diwali. And that's why this 3 to 4 days, I think, will add on to the bonanza of the Diwali.
But there's been a bit of a mood spoiler, if I may call it. There has been a rap on the knuckles of a lot of NBFCs which were fueling this purchase behavior by citizens. So do you think your sales could be impacted in any manner, curbing them to go full force as far as unsecured consumer loans are concerned?
So I think there has been some changes which the RBS has asked them to go through to do, and I think they will follow those rules and all. But at the end of the day, what I have gathered from the brands, NBFCs with whom we are dealing, it will only increase the cost slightly. And I think the way our industry is aligned and is totally based on EMI sales, so I think the industry will absorb the cost. So in a nutshell, I don't see any major challenge in the short run.
Pushpa, give us a flavor of, would you have any data among categories? What's selling most right now? Is it's about apparel, shoes, jewelry, or cosmetics? What exactly is flying off the shelf?
Well, I think the flavor is apparel, because winter merchandise is fresh. And so apparel followed with beauty and shoes. That's really the flavor that we see, but it's too early. It's just started. The sale is just started at 11:30 today. we do believe that, jewelry may not have that much of a spike because people have ramped up for their wedding season during the festive period of Diwali and Dussehra. I think it'll be much more apparel, beauty, footwear, and of course, F&B driven.
Point taken. That's good to know. So everything is flying off the shelf, but it's apparels which is doing quite good. And Nilesh is talking about how mobile phones, even of the premium category, are seeing quite a few buyers. What are you going to buy,
Actually,
Ajay?
I was thinking about this time I went and actually bought a very expensive phone for my wife, a Samsung foldable phone.
Oh,
and it
fancy.
it costed my 5 to 7 years of phone usage. My phone is a simple one, but of course, if every married guy knows the secret of a very happy household: keep the wife happy. So I also contributed to that particular mantra. What about you?
I'm just thinking I can buy pretty much everything. I'm thinking I need more of apparels as always, more of beauty products, more of jewelry as well. Why take one when you can take all?
All right.
Yes, I think we are already in the
I think Pushpa
Friday
is
mode.
making a point. Pushpa is making a point. Pushpa, what are you saying?
I said on that count, we actually released a video called Girl Math. Girl Math is very different, and you should hear that and you'll understand what we mean.
All right, we will.
Totally, but it has been a very interesting discussion. Thank you, Nilesh, as well as Pushpa, for making time and speaking with us. And I know where Ajay and me are headed at 3:30. I think we'll bump into each other at the mall next door. But time now to take a short break. But before we do that, let's talk market as well. We have Kunal and Naresh also with us. Kunal, what are you buying? And not just in the malls, but in the stock markets.
Yeah, in the malls, we'll see. I think because I have to take my kids and I'm sure they'll be buying a lot of apparel. But in terms of stock market, I think HDFC Bank is something which looks attractive, and I think that's a stock which is making a very strong comeback. So it's more like a statement which is coming across from the private sector banking names, larger cap stocks, and I think HDFC Bank looks to be robust one amongst them.
Okay, and what about you, Naresh? Is there anything you are looking at buying at all, both in the stock markets and the malls?
So I'm an online shopper that continues pretty regularly. On the stock specific side, what we are seeing is some bit of a jump happening in HDFC Bank, which is the largest weight on the Nifty. We saw some bit of a recovery in Reliance, but no follow-up today. So it's still a slow and steady move given the IPO rush, etc. It seems more of the action is happening on the primary market than on the secondary market today. And maybe next 2-3 sessions, but the bias remains positive across the board. We are seeing new sectors jump up every other day. So today it is insurance.
Mahantesh too has been very patiently waiting by. Thank you so much, Mahantesh, for waiting by. Just the same question. What are you buying?
Oh, actually, I didn't buy anything. It was for me more about buying a holiday than any consumer durable item. But as far as stocks is concerned, I think I'll go by sectors. And within sectors, I think the hospital segment looks quite attractive. They're poised for a great growth ahead. Most of the hospitals are ramping up both in terms of capacity as well as overall revenue. Post-COVID, they are reaping the benefits of more and more hospital visits that are coming in.
We were just going through the data for Tata Technologies subscription number coming in. If IREDA, the IREDA, the renewable financier subscription was 83,000 for a 2,000 crore offering, this one is crossing 1 lakh crore already. You must have analyzed both these IPOs as well. So with that amount of interest, is it right to assume that once it lists, unmet buying could also take these stocks higher, and so the investor who didn't get it shouldn't jump in right now, and those who got it should not in a hurry book profits?
See, it's like this. I have never been an IPO man because the way IPOs are structured in India is that it leaves a lot of unmet demand, and much of that demand is many a times is evaporative demand. That means demand evaporates pretty much on just the listing date. For me, it is more about looking at the fundamentals of the company and the business structure and the valuations thereof. And that would help me pick an IPO. Of course, you should apply for an IPO because luck is something that can favor anyone. But having said that, post-listing is a bit of a tricky game because you have to wait for that evaporation of demand. I told you that much of that demand that exists for an IPO evaporates pretty fast. So you talked about follow-up buying for certain IPOs. I think what typically tends to happen in a situation where the overall market is not doing really well, there could be a sense of follow-up buying coming up or follow-up demand coming up from some of these names. Both IREDA and Tata Tech that you talked about are quality companies in terms of businesses, and therefore they would have a bit of a follow-up demand coming in. But given the subscription that we have seen, there would be a lot of demand that will just evaporate on the IPO listing date.
Yeah, a lot of demand, and I'm guessing that is going to turn out into a very hefty listing gain, and probably the momentum might continue from there on as well. Gentlemen, Nuresh, Kunal, as well as Mahantesh, hold that thought. We'll have to take a small break on the show, but when we come back, we'll discuss a whole host of other stocks. Welcome back. Jonathan Shizal also joins us on the show. Mahantesh is with us, and so is Kunal and Nuresh. But Jonathan, let me first come to you. What's been the overall momentum and view on India like? The naysayers have always been complaining about the punchy valuations. Is that still a concern, or the earnings growth that we have seen, it has got them a bit shut?
Yeah, as you say, I think valuations, when people look at Indian valuations, they always get somewhat concerned, but I think people who know and understand the market, that it's just something you have to accept. And obviously the return ratios, the ROEs, etc., that India offers are in excess of what you'll find elsewhere. So there is some justification for the higher valuations. I think the concern perhaps is a little bit more on the mid and small caps, which obviously is trading at a premium to the large caps now. I think that area probably of the market is some concern for some foreign investors.
Jonathan, how are you analyzing the Indian PSU space? We saw a big run-up happening in the entire defense and railway space last year. Before that, it was the PSU banks which got re-rated. Now all of them are going sideways, and OMCs are back on radar. Some insurance companies in the PSU space. So market is taking turns to re-rate the Indian PSU pack. Anything which interests you on risk-reward metric, even in current environment?
Yeah, look, I think, I mean, clearly we've generally shied away from a lot of the PSU space, just because we can find, quite frankly, better private sector alternatives. Obviously, the PSU space has been attractive for that lower valuation, and you know that some of them do have pretty good stories attached to them. But as a whole, it's not a space that we tend to focus on too much. Our process tends to sort of try and focus on companies where we understand the shareholder, what the sort of shareholder actions will be. And obviously in the PSU sector, there is always a risk of divestments or other sort of factors at play. So generally we shy a little bit away from them, but I think, you know, as we all know, when the market trades at reasonably punchy valuation, people do start looking at the PSUs again. And obviously there's some sectors where the PSU players give you pretty good exposure as well.
Actually, we have a colleague Sharad who's standing by to tell us what's the latest on Dalal Street. Sharad, what's the khabar? What's buzzing around in the dealer's room?
Well, in the dealer's room, the street is expecting that mid-cap cement companies are in focus, and of course, Nuvoco Vistas would be actually particularly stock of interest. As what we are hearing from the dealers is, a couple of DIs have actually entered into the stock. They have acquired a significant portion, and importantly, the volumes, if you look at it, that's coming at almost 5 times its 20-day average. And the key DIs already invested in the company includes the names such as SBI Mutual Fund and ICICI Pru Mutual Fund. Now, 2 days ago, the company did meet Bajaj Alliance as well. And importantly, if you look at it, the company is not expected to take any much further price hikes going ahead, as they'll be actually passing on the benefits of lower raw material costs to the final consumers. Now, overall, in the mid-cap cement space also, the dealers have stated that consolidation is expected to happen as larger cement players are looking out for better deals to acquire them in the mid-cap as well as the small-cap space. So this space is expected to buzz also going ahead as well.
Can Mahantesh come in on this one? Do you think cement and building materials is a better way to play the real estate theme right now? Because the real estate developers themselves have run up quite substantially.
Yeah, I think sometimes it does make sense to play on the real estate segment through the cement companies, but not necessarily always. In fact, now is the time that we are seeing that the real estate companies have done really well, both in terms of the overall sales momentum that they're able to garner, as well as the prospects ahead, because a lot of repair of the economy has happened post-COVID, which is inducing the buyers to buy into or lock in into homes, particularly given the fact that we have had rising interest rates now, which are seemingly peaking out. RBI hasn't changed the interest rates for quite a few months now, and it tells us that this could probably be the good time to lock in your home buying activity, because you will not you will potentially see interest rates actually falling as you go ahead, because most of the home loans are variable interest rate structured. You will tend to find that benefit coming in through. So I don't believe that this is the time to get into the cement companies as a play on the real estate sector. Cement companies offer a play, typically better play when the infrastructure activities get a leg up or a boost due to a certain degree of activity. And now, since we're approaching an election year, these kind of activities will run its course. Now, I don't think fresh orders from the governments will be released wholesomely anymore till the new government comes in play. So therefore, cement is not the theme that I would play right now.
I want to get your thoughts on the way markets seem to be revisiting their love for two-wheeler stocks. Not that they're not doing good already, but if you look at the last 1 year chart of Hero Moto, TVS, Bajaj, even Eicher has shunned that, the nervousness Street had with aggressive launches from TVS and Hero. Everything has come back in style, and one of the word people are saying that the new launch pipeline of all the two-wheeler companies are looking good. Is that the thing? Is it expensive?
Not only that, it's not just about the new pipeline. It's just that the sales have started recovering. We have had a great deal of lull in terms of overall motorcycle sales, particularly in the entry-level segment, for quite a few years. And that lull had induced a valuation drop in most of the two-wheeler companies, barring a few. Probably a TVS escaped that valuation drop, but you saw that valuation drop come in earlier for Eicher, later for Bajaj Auto, and then continued to remain there for Hero MotoCorp. But having said that, since the sales momentum is recovering gradually, we should see better performance from two-wheeler companies, and that generic threat that two-wheelers always seem to have faced from electric bikes, electric scooters, is somewhat plateauing out, because we don't see much enthusiasm coming in for electrical bikes beyond a particular that filling activity that happened initially in terms of the demand fill is kind of over. So the sales momentum coming back, classically the two-wheeler companies are regaining their valuation momentum back again. Mind you, among the automobile companies, two-wheeler companies were known to have higher margins, higher ROEs and ROCs relative to the other automobile companies, and they were always termed cash generators. So I think the sales momentum is bringing that valuation mojo back into the two-wheeler companies.
Point taken. But Jonathan, financials, of course, is one big favorite with the FIIs. What are the other big themes that you're watching out for? There has been this entire Make in India and manufacturing push, power utilities, public sector entities have been doing well. Are you seeing increased interest around these themes?
To a degree, I think. Yeah, I think, as I've often said in the past, financials do remain probably the key sector, certainly from a foreign investor perspective. Obviously, some of the big, particularly the private banks and some of the other varied financial companies that you can find on the Indian markets, they clearly play into a lot of different sectors and different pockets of the economy. So buying banks or other financial companies does give you good exposure to the broader Indian story as such. So it is a good sector and will remain one for some time to come. Obviously, the other sectors would be some of the consumption-focused sectors as well. I think a lot of foreign investors tend to focus on those areas. And obviously more recently back into the whole infra space, which seems to have done very well as well.
Jonathan, you guys also like NBFCs, the vehicles of change in the unbanked India, because whatever said and done, there are spurts when these kind of stocks do very well. They do very high growth as far as their numbers are concerned, but somehow they never get the the kind of respect which a bank does, right? And even the valuation multiple. So there is always a gap between them. Some of them have done very well, apart from, of course, Bajaj Finance, which is the industry leader. Do you like these names, any of the names there?
Yeah, so not currently looking at them at the moment, but previously I totally agree with you. There's some very interesting non-bank financials out there that play to certain segments with high growth. And obviously the business models have changed over time. The risks associated with lending in some of these spaces are very well managed. They're using technology very well. So in the past, we've played Bandan and a whole bunch of other different NBFCs, and I would agree with you that there's some very interesting companies in the space, and it's a space which does warrant attention.
A bit more about power and power ancillaries. Naresh, come in on the chart checks for BHEL as well as a couple of these other names like SJVN, JSW Energy, and even Suzlon for that matter. Heavy volumes on that one. Naresh, you'll have to unmute yourself.
Most of these sector names have turned around big time. So if you look at BHEL, the stock used to be at 150 last in 2015-16, where it started correcting. So it's given a 5-7 year breakout over the last 2-3 months. So the trend remains pretty positive here. And today is a fresh new 52-week high and again crossing the recent highs. So overall, the next target slowly and steadily could be the 200 mark, where it went in post 2014 election. So that could be the next one. SJVN has continued in a strong trend as well, similarly notching new all-time highs. So this could be a buy on dips. Suzlon similarly has gone up quite a lot over the last few months, but would wait it out. But overall, the trend is pretty positive. The only name which has not done as well as NHPC. So there is some upside left in NHPC where the risk reward is still good.
Okay. Jonathan, how are you approaching the pharma names here in India? Because we have got a massive variety of healthcare, the entire bouquet, right? Pure play generics, diagnostic, you name it and you have it here. Which part of the entire value chain do you like?
Yeah, look, I think that's a very valid point. Another area where there's a lot of focus, and as you say, that you get a whole variety of different companies doing different things. At the moment, we only have one position in that space. Obviously, the question is, are you looking for domestic growth or, obviously the traditional more export type names in the area? I think as a pack, they've done pretty well, haven't they, more recently? Is that a defensive push? Or, is India now looking, is that whole sector going to push up again? We've only got a small amount of exposure to the pharma sector at the moment. Just one name, as I mentioned. But yeah, there are some interesting companies, but clearly, there's always other factors at play, be it FDA checks and what's going on the export side as well. So it's an interesting sector, but one has to be very aware of what's going on with the underlying names.
This is something, Ajay, even you were pointing out yesterday, the up move in the RP Group. So today, it is the retail arm, which is actually doing quite well. Spencer's Retail. Yesterday, it was RPS Ventures. And then other companies, PCBL, etc. They've all done very well in the month gone by. Kunal, if you want to come in on the charts for these group companies.
Yeah, so Philip Carbon, we were discussing that. So that's a stock which looks attractive. In fact, there was this point around 200, 210 mark where the stock consolidated, was a bit volatile. But then I think post that breakout of 210, it's been more of a clean upside for Philip Carbon. It looks very attractive even at current levels of 255, 260, where the stock has been trading mostly throughout the day. So I would still believe that there should be an upside of at least till 280 to 300 for the stock, given the way the momentum is shaped up. Spencer's, on the other hand, today seems to be more of a breakout candidate. So, we look out for price volume breakouts and stocks specifically coming out of a major consolidation. I think Spencer's is also showing those kind of signs. Stock is above 50 DMA. Good volumes today, seen for the stock above 74 plus levels. The next targets for the stock comes closer to 80, 82 levels, which means a further upside of at least another 10%.
That's a pure play retail stock, but RPSG is a very different company because it houses the Lucknow IPL team, almost $1 billion in a 1400 crore market cap company. Just like any company which comes close is India Cements, which has got Chennai Super Kings. Jonathan, I'm sure you're watching cricket and what happened this time round. Assuming that any of these two Indian companies actually demerge their cricket franchises and list them separately, would you buy them?
We don't talk about the cricket, do we, over in the UK? Anyway, yeah, look, it's clearly, these franchises have considerable value for the parent companies that do own them. I think, are they making money, the individual franchises? I think obviously before listing, we'd have to understand the business models. How are they profitable? If you just look at some other sports franchises listed elsewhere, a lot of them do burn a lot of cash. So I think, as you rightly say, an interesting sector, but probably need to understand the financials a bit better before being able to confirm whether we'd look at them.
And I think a lot of people would say the same about Honasan Consumers as well. Mahantesh, this move that we have seen over the last couple of days, is it a catch-up that was warranted, or is it just too fast too soon?
It seems to be too fast too soon. If you look at really the analysis of the results prompted these whole spurt in Honasan Consumers. But if you an interesting observation is that their EBITDA margin that they achieved for the first half this year has come purely because they curtailed their advertising expenses, and there was a big benefit that they drew from the employee costs related to stock options. Now, these are not sustainable advantages that can be, that analysts can build into their forecast ahead. And therefore, I am a bit skeptical. I have already said before that this is one company which had a fractured balance sheet, and it will take a few years before that balance sheet will be repaired. I was talking about the results. The FY22 EBITDA margins were near similar to what we have achieved. That means 2 years ago, what they achieved is the EBITDA margin that they've achieved in FY24. So why should one be so excited about that company, which is already priced itself out in terms of the IPO valuation? So I'll wait out for the stock to correct and have a look at it. But right now, the business doesn't seem to be doing any better than what they have done in the past.
What is the area of the market which you are looking very closely right now on the risk reward basis, which is looking attractive?
So, I did mention about the hospital sector, right? This is one place where I believe there is ample room for growth. Particularly because as the health insurance penetration is growing, not just from the private sector side, but there is a considerable push that is coming in from the government side in terms of having health insurance, which translates directly into more hospital visits for a lot of individuals in India. And the hospitals in the listed space are the best ones to actually capture that growth ahead. So it's a sustainable kind of growth. The risk of obviously associated with these hospitals is that they very often gasp for growth, because the growth for an hospital comes only through having more and more beds, more and more hospital centers, and not every hospital can manage that kind of growth ahead. So having said that, if you build a portfolio which comprises of a clutch of hospitals within your portfolio, hopefully they as a pack will continue to grow better overall, given that the health sector is doing well.
Point taken. Jonathan, what about the other themes which are doing quite well in the market? Real estate, consumption, and the entire premiumization wave. We were just discussing with a couple of retailers how the Black Friday sale is really picking up. Do you think this could be a trend where you can make money as well in the stock markets?
I think, yeah, look, it's the premiumization and that whole area is, or the whole theme, if you like, is not a new one. It's clearly been one of the major stories around the whole Indian markets as consumers push up into better premium, better branded products. So definitely, it's a huge opportunity, I think, for many companies in India today, be they domestic or multinationals who are operating there. So yes, absolutely, a very important thing.
Mantesh, on that note, we'll let you go. Thank you, gentlemen, for making time and speaking with TT now. But we do need to go to our technical experts to understand how next week is likely to pan out, because it's going to be an important one next week. A lot of cues lined up. Of course, the biggest is the monthly options expiry. You also have a lot of IPO action coming in next week, because probably a lot of companies which are right now underway in terms of IPO subscriptions will get listed in the coming week. There's Q2 GDP data which is lined up. So again, something to watch out for. And oil has been very volatile, the crude prices. OPEC meeting outcome is slated for next week. So that will be important. And the auto sales, so the auto stocks will continue to be in focus on account of all of that. But yes, top of heap is the monthly options expiry. So Kunal, quickly, your BTST ideas and your take on the index level.
So BTST ideas, I'll go with HAL as a buy, Hindustan Aeronautics. That stock looks attractive. Targets of 2280, stop loss at 2212. And Hindustan Copper is the other stock which is completing a flag pattern breakout, would suggest a buy with 172 as target, stop loss 163. And I think for the next series, I would go with the bullish stance for both the indices, Nifty as well as Bank Nifty.
Suresh, similar question to you.
So first would be a buy on Bharat Forge. The stock has given a breakout and very close to new all-time high. Stop loss at 1100, target price of 1150. Second is a buy on Granules. Good momentum breakout today. Stop loss at 384, target price of 398.
Okay, so that's the verdict coming in from our technical experts. Thank you, gentlemen, for being with us today and taking us through this very subdued trading session, at least at the index level. We are ending below 19,800, just 7 to 6 points lower, so really no move at the index. Sensex 2 is down about at a similar range. It's Bank Nifty which has managed to actually outperform yet again. Yesterday also we saw that trend, and today too it's the banking names that are holding up. Pull up an HDFC Bank. That could be one of the heavyweights that has done well. You also have Axis Bank. After that, analyst meet continues to be in focus. ICICI Bank, IDFC First Bank. These were your other top gainers. Broader markets is where the action was. Advanced decline ratio was favoring the bears, but nonetheless, if you look at the insurance sector, that was on fire today. So a national, India Assurance, a GIC, a LIC, all of these names are firing up. And then the other pocket was these defense packs and other PSUs. Hindustan Aeronautics, Bharat Dynamics, BHEL. These were some of your top gainers as well. Pharma continued to be in flavor, so we saw a bit of a bounce back on Cipla. Lupin continued to trend higher. Gland Pharma also reacted to the news flow. On the losing side, we had Paytm. There was a large deal that happened there, so the block coming under pressure. And then, of course, Honasa, that continued its bull run for the second day. In fact, that stock has surged substantially this week itself, post its earnings very close to that 500 rupee mark, and the management is quite confident of the outlook as well. JSW Energy, on account of that Jeffries note, the greed and fear note was in focus, and Honasa too was one of the recommendations that got added to the portfolio versus Marico. So we are watching out for that. But overall, it's a good close coming in for the Indian markets. We are ending in the green for the week, fourth consecutive week of advances for the Indian markets. So I'm sure the bulls will be happy, and more importantly, it's a long weekend for us. So hope you have a nice one. Thank you so much for being with us.